Okay, welcome, ladies and gentlemen, to another night of Copy Time and Crypto Night. Tonight, we have a very special guest. We have Gunnar from First Digital Trust. Um, so, I just want to do a sound check. So please reply below to see if you can hear us. Can you hear us loud and clear? So yeah, just put it in the comment section. Gunnar, did you want to just do a quick sound check to make sure the audience can hear us? I think you're on mute, Gunnar.
I guess that's why we do a sound check, right? Yeah, can you guys hear me now?
I can hear you. I can hear you fine.
That's good.
So let's So for the audience, can you please put it in the comment section to see if you can hear us loud and clear. But I can hear you loud and clear, Gunnar. Okay. Yep. So it's good. It's very crisp, clear. Okay. So before we start, and while Sean says that you were on mute, but no, we got a thumbs up. So okay, we're hearing us loud and clear. So before we begin, as we let the viewers stroll in, can look, share, do share this with your friends. Share the link. Click on the share button. Feel free to like it, right? Share it. And invite your friends to come and listen to today's very interesting topic, right? So we've got a very special guest tonight. Okay, now before I proceed, let me just share my screen quickly. And I'm going to share, this one. Yes. Okay. So this is, I'm going to put in present. Okay, so this is just a standard disclaimer, right? Whatever we discuss tonight is only for educational purposes. This is not financial advice. If you do decide to make any decisions, please feel free to consult your financial advisor, right? So anything discussed tonight is it's purely educational, okay? Daniel's just strolled in. So hello, Sean. Hello, Daniel. Hello, Melissa. Okay. So so this is just financial. This is not financial advice. This is for educational purposes only. Okay, I'm gonna go ahead and unshare that. Just wanted to flash that. Please read that. Right. So tonight we have a very special guest, Gunnar. Gunnar's actually from a trust company called the First Digital Trust, which is based out in Hong Kong, and it's also part of. Well, I guess I'll let you tell the story. I'll let you tell the story of how First Digital Trust came to be. But so Gunnar is the COO, right, the Chief Operating Officer of First Digital Trust, and tonight he's going to share with us some insights into the crypto industry. Now, so every time we have this session, I try to bring guests to share with our guests, to share with our viewers, to show them what's actually happening. Besides what's within the borders, but what's happening globally, right? And so this is one of the fastest growing industries around right now, and it is literally bleeding edge tech. Obviously, regulations and laws always trying to catch up with technology, and so every time we have these sessions, I hope you gain a lot out of it. And you hear it directly from our special guests. And so, actually, I will pass you on to Gunnar. And Gunnar, I'll let you introduce yourself. Tell us a little bit about yourself. About First Digital, the story behind it, and over to you, Gunnar.
Well, thanks, Andrew. Well, first of all, thanks for having me on the podcast or live show, or I'm not even sure how to call it these days. Yeah. Everybody is moving to online. But yeah, just to do a quick intro about myself and about our company. I am the COO of First Digital Trust. First Digital Trust is a Hong Kong-based trust company. It's First Digital Trust itself is a quite young company in a way, but we do have a backstory, and we do have a sort of a genesis story. First Digital Trust is a spin-off from Legacy Trust Company, which has been around since 1992. And why it's quite interesting is, trust structures and trust companies have been around the world in common law jurisdictions for a long time. And in the same way with Legacy Trust Company, we've been around since 1992, mainly focusing on retirement funds, pension funds, very traditional clients like high net worth individuals, family offices, and so on. And about 3 years ago, we got into the digital asset space, and it was a very, very, very different time back then. It was like cowboy town. There were these weird crypto transactions, deals going on, and we sort of took a venture into this space with Legacy Trust. We started building up this space as a sorry guys, just let me just want to make sure. Can you guys see my screen beyond the video, my slides? Yeah.
Yep. Looks good.
Yeah. So let me just switch into that. I think it sort of illustrates my point. But yeah, so we were working. Legacy Trust has been around quite a while, and we really got into this space. And we were working with some of our clients that were quite eager to get something done in this space, and generate revenue, participate in transactions, and all of that. And they came to us and asked how we can help them and how we can help make transactions secure. And that's a very sort of genesis story how we got into the digital asset space with Legacy. We were building out this business for about 3 years because, as you can imagine, it was sort of very early days. Nobody was not even sure whether this was going to be around for a while. There was a lot of excitement around it, but we took a sort of very cautious approach to it, and we built a business under Legacy's umbrella, servicing digital asset clients, and that's really how First Digital Trust got started. The reason why we have 2 trust companies today is that the business models are very different. So as I mentioned, Legacy has been around for a while. The types of clients that we service, they tend to be, like I said, more institutional, maybe like pension funds. They tend to be like family offices, high net worth individuals. And whatever we were doing in the pension space was quite different from what we were doing on a traditional side. So last year, back in 2019, we finally felt confident enough that this industry is, first of all, it's here to stay. We felt confident enough that there is enough volumes and revenues and enough business to be done in this space and enough problems to be solved. And that's why we decided to spin it off into a separate trust company. And the reason why we did it as a separate trust company is because in Hong Kong, unfortunately, trust companies are not allowed to own other trust companies. And there's very good reasons for that. I won't go into that today. But that was essentially the decision to spin it off into a separate trust company. So for the past 14 months, almost 16 months, we have been working very hard to move some of our clients over to get all the regulatory licensing done. And we set up a trust company that's mainly focused on digital asset clients, fintech companies, and these sort of new wave crypto companies, and servicing and providing them infrastructure. So that's why we call it First Digital Trust, is because trust companies, as I mentioned, very traditional business. have been around for hundreds of years. Common law space trust has existed for 200 plus years from the days of knights back in UK. But we see that this is a really sort of a new iteration what trust can do, and hence first digital trust. And maybe on the intro side, I do want to mention that there has been a lot of innovation in the banking space. We have open banking APIs and all of these things. And banking is very similar to trust, but there hasn't been much innovation in the trust arena or trust space. So that's what we're trying to do with First Digital Trust. We're really trying to push some of the innovation in the trust space in an industry that's desperately lacking trust. Blockchain is good and is great and it works really well, but in a way, when two people are still transacting, there is that element that's needed if those people do not have direct contact with each other. So that's what we're doing. So in summary, our genesis story, we come from very traditional space. We entered into a very exciting area, and we built the business and we spun it off into a new trust company. And now we're mainly focused on servicing fintech clients and helping these companies to actually succeed in this space where, in many times, maybe they don't have the right industry connections. Maybe there is, because there is still need for fiat, money service businesses, operations, all of that. And this is where we come in. So that's our story.
Okay, thank you. Thanks, Gunnar. So while we're there, let's take it a step back, right? So a lot of the viewers, the concept of a trust may not be so, not many people think about it, right? So maybe if we go back to basics, very candidly, right? I'm just gonna ask you. So how do rich people structure their estate, right? Like through a trust company? How would they structure a trust in order to protect their assets, right?
Well, let me really jump back in time, and I mentioned where the trust actually comes from is from medieval times, and it's a very a common law construct, and it originates from UK, and this is medieval times when you can imagine knights or picture Game of Thrones, right? when knights and there was a lot of these kinds of very traditional wars, and when knights went to the war, back then it wasn't a quick trip, you hop on a plane and go to war and come back from duty next month or a few months back. Back then there was a really sort of expectation that it's the knights and the property owners and the people that are sort of loyal to the government that they have to go and fight and they have to take their people. But it meant back then they have to go away for maybe 2 or 3 years without seeing their property, without seeing any of their assets. And what they had to do is they really had to leave somebody trusted or somebody in control of their assets. And that's where a trust comes. So if you go away for 2 or 3 or 5 years and maybe you're not even coming back, you want to leave somebody in control of your assets that's going to carry out your instructions, your orders while you're away. And hopefully, fingers crossed, when you come back, all of those things have been done and nothing has changed. And in some cases, people didn't come back and so on. So it sort of acted like a will as well. But that was the point, and this was really the olden days. How that evolved into sort of a more modern concept is that people use a trust to essentially separate the legal and beneficial ownership. People are very used to traditionally, if you buy a house, you own the title, you own the house, it's in your name, and you deal with all of these things, that come with property ownership. But how a lot of high net worth people structure their assets and place their assets is really through either corporate structures or trust structures. And there's a lot of benefits to that, because when you separate the legal and beneficial ownership, it can essentially give you some tax benefits. It can release you from some of the obligation of day-to-day management of a property or asset. It doesn't have to be like real estate. It could be any kind of asset. It could be investment. It could be anything, essentially. You can hold it in a trust. And it's a very useful tool that a lot of, I mentioned family offices before, that a lot of family offices use, and a lot of high net worth individuals use to take care of their affairs and manage their assets globally without having a direct control over it, but indirectly, in a way, having that control or having that reassurance that their wishes and their instructions are being taken care of. And maybe I'll just finish this with a quote from Rockefeller. So his quote was, "Own nothing but control everything." And this is a perfect sort of example of a trust where you maintain the beneficial ownership, but you don't necessarily maintain day-to-day control of that.
Cool. No, that's very good. No, so essentially, you let's say, for example, I go and purchase a property, but instead of putting the property in my name, I'm putting the property under the trust, right? Under the trust of for example, a legacy trust or First Digital.
That's correct. Yeah. So what it really does, it separates the title from the beneficial ownership. So although on the, imagine a typical property title in many countries, it's been done on paper and you see the title. The title says the owner is, for example, legacy trust company, but you still have the beneficial rights, and that's protected under the common law. So all the jurisdictions, whether it's UK, whether it's Hong Kong, whether it's Malaysia, wherever you have common law, it's a recognized concept, and it really separates that. And what you see is a lot of taxation is it's driven by the legal ownership. And there's a lot of things, like, for example, when it comes to reporting and all of these things, it's really driven by legal ownership. So it allows you to separate these two things. And even though when you have somebody else's name, like a trust company name on the title, it doesn't mean that you sort of split it. It's a set piece in a law, in a way. It's not like a nominee or, like you put a straw man or somebody to, hide your property, all of that. It's a very set piece. It's a well-recognized concept in common law.
Yep. So again, I'm going to go back to basics, right? So, So as you mentioned, so one of the main benefits or main advantages of holding your assets under trust is that, the quote that you had about from Rockefeller is to own nothing but control everything. So essentially, also having limited liability, then, right? Say you
in a way,
yeah. Okay.
Yeah, I mean, so I'll let you finish your thought, but yeah.
No. Go ahead. I'm just trying to, understand or at least convey the benefits of, owning your assets through a trust. Like, why would a person want to do that, right? Why? Yeah.
So one of the things is, like, if you consolidate all of your assets into a trust, it's a little bit different from like a corporate structure, but it gives you the same benefits. So it gives you visibility. If you have your assets under a trust, you probably have a trusted trustee or a trust company that manages those assets. And from the very first day when you set up your trust, you define the rules. So you define, let's say, for example, if let's say you're not owning property, but let's say you have cash or assets, other investments in a trust. You define the rules, or you can define the rules. What are the types of investments that a trustee can make? And you sort of set your broad picture in terms of how your trust is supposed to be managed. When we are talking about property specifically, there is a lot of benefits. I mean, one of the things is privacy. We live in a world where we're basically in a glass box. And whether it's for personal reasons or whether it's for, let's say if you're from Europe and you're buying property in maybe in a country that's not so stable, but you still are quite adventurous. You want to take the risk, but maybe you don't want everybody to know that you're the beneficial owner of that property. Whether it's because it could expose you to external threats. You have like developing countries where there's high rate of crime. There's all of these things that could make you a potential target. Somebody could just go into government registry, see who owns the most expensive properties, and you could be a potential target for a crime, for example. So like in places like Malaysia, that's not really an issue. But maybe if you're going to like countries like Myanmar, that's just trying to open up, and that's put some of these things in place, maybe you don't want to publicly advertise that you own all of these properties. And it's fine. Like the trust company can hold the title, and it gives you a level of privacy. It's not to hide your identity or in that sense, but it's a real risk. If you're a high net worth individual, the types of problems these kinds of people have are very different from from a lot of other people. If you own a $5 million property in Myanmar, I bet you could be quite interesting person for a lot of elements there. Maybe that don't have very good intentions. So that's one thing. The other thing is, like I mentioned before, is like streamlining your affairs. So you set up one trust, you can own property globally. It will just make taxation much more streamlined. It makes it much more easier. It makes, we live in a global world, especially if you have like dual citizenships and all that. It just makes a lot of these, global property ownership and global asset ownership much easier. And it's not about real estate only. It's like, let's imagine stocks. So maybe, you're really interested in investing in stocks. You want to participate in stock markets in China. You want to participate in stock markets in US and Europe. Are you going to individually, open brokerage accounts and do all of that on one-by-one basis? No, you probably need a structure to consolidate that. So trust is a sort of a perfect vehicle to do that, and it gives you these benefits. It gives you, in certain cases, it gives you tax benefits. It gives you structuring benefits, making some of the affairs easier, and it also it gives you privacy. It doesn't hide it doesn't allow you to do anything illegal in that sense, but it gives you that very basic level of privacy.
Yeah. No, thanks for that. So, Legacy Trust and also First Digital are both, based in Hong Kong, right? So I suppose the next question is, can a Malaysian who's interested, to engage the services of Legacy or First Digital, how can they do that? How would they go about, engaging the services?
So it's very similar. I know a lot of Malaysian people have, for example, bank accounts in Singapore. So it's the same way. Basically, you need to we don't the trusts that we set up are all domiciled in Hong Kong. So they're set up in Hong Kong. So that would mean that anybody from Malaysia would actually have to go through Hong Kong to set up the trust account. But it's a very simple process. Like you open a bank account in Singapore. I don't know, just pick a random bank like OCBC, you open up a bank there. It's probably like a day trip, or in some cases you can even do it remotely. So that's not really a barrier in that sense. And when it comes to the law and structures, it's like I said, it's all common law in in this part of the world in most cases. So it's not that difficult.
Cool. So where I was going to lead to is essentially, so now we've talked about traditional assets, right? We've talked about properties. We've talked about stocks. It's also, you said any asset. So I suppose maybe could wine collection, like could that come under trust? What about paintings? Could we put paintings under trust? I don't know, gold bars. Are all those things possible to also be put under on the trust?
Yeah, so the laws, trust laws are different in different countries. For example, in Hong Kong, the trust laws are very flexible. So they have a term, so they just define it as a property essentially, and they give some examples, but it's a very broad term, and we can hold all kinds of property. We do hold physical assets. For example, on more traditional side, on the legacy side, we work with some fine art collectors. We have physical vaults in different locations. Something that you would imagine like in Ocean's 11 or something. I remember the first time when I was invited to go to one of these places. You can imagine this like big door with a big handle. It's exactly like that. And they have these like climate controlled vaults, and you have fine art there and all of that. So we do hold all kinds of property, like the ones that you mentioned. Fine art is one. Fine wine, same thing. Has to be climate controlled. You need a physical place to store it. You need to have like internal controls in place to make sure that all the access, all of that is controlled. And then we really get to like Ocean's 11 kind of stuff, where you have like gold bars and like other very valuable property that's actually very small. And funnily enough, somebody was telling me, maybe later on we'll jump on the crypto side. Like crypto is probably even more easier to store because you have a small device, right? If you're like a retail person, you might have like millions of dollars in a device that's the size of a thumb drive. So that was like really the early days on the crypto side. But yeah, so we do traditional assets, and we store physical assets. It's a mixed bag. It tends to be like, I would say physical assets is still like 10 to 20%. Mostly it's investments, mostly it's like cash, fiat. And these days, increasingly more digital assets or crypto.
Yeah. So the question that I'm going to ask next is about So I suppose that's where legacy was in. Legacy trust was in that space, right? And then with the rise in this new asset class, crypto as a new asset class or digital assets, how did legacy trust? Look, it's a very traditional business. So how did you actually have the vision to see, hey, hang on, like you said, it's stored in a very small device. You might have millions in there. You might not trust yourself, right? You might be afraid to store it yourself. So, and obviously traditional banks don't do that right now. And so, so tell us how, legacy trust kind of evolved, right, into seeing an opportunity in being a trust company for digital assets.
So it basically, the very first signs that we saw were some of our existing clients. There were some really early days, like like Chinese family offices and sort of a certain area of our clientele that are more risk tolerant, that wanted to get a piece of this industry. But if we rewind like 3 years back, it was a very different space. So the first thing was like we got inquiries from our clients. Can you help us to hold our crypto? People that already had purchased some. And the other one was, can you help us to do escrow for transactions? That was like the really early days, how we really got into this space. And we sort of looked at it, and we personally, I heard of Bitcoin and all of these cryptocurrencies before, but I was very skeptical still. But we started getting these inquiries, and the ticket size or the values were quite high. And then we were like, okay, this might be something actually quite interesting. But again, legacy is a very traditional space, and we stayed away. We actually, I wish we would have had the guts to get into the space a little bit earlier, but we waited about maybe 6 months to a year, and then it seemed to get very heated up. And I was talking to the CEO of Legacy Trust Company, and I said, just give me 6 months, let me do my thing. I'll I'll go to the conferences. I'll find out, who the players are, who the people are in this space, what are the issues that they're really having. And I sort of went on this expedition. I was traveling a lot back then. My first conference was in Bangkok. We did like Singapore, Dubai, like all over the place, like US. And it was a sort of a learning process. And what we found out was really that back then, again, this is like end of 2017, beginning of 2018, was that the main issue was safekeeping. And how do you protect against theft and hackings? You saw some of the biggest hacks back then, like, hundreds of millions of dollars. And, back then right now I can tell you, like, we looked into everything. We did proprietary storage. We did, everything off the shelf. Like the only players back then on the retail side were Trezor and Ledger. And we pretty much tried everything, but it really didn't fit our traditional sort of approach. So we were quite cautious, but I think where we really got our break and where we really thought we were onto something is this must have been end of 2018 when we partnered up with Ledger Vault, or a company called Ledger, and they were working on a product called Ledger Vault, which was the first institutional grade storage, and they had it in use like as a proof of concept with some of their clients. And we were like, okay, this is actually something that we need, where we have operational controls, where we can control the security, and we, both of our companies really hit it off. And we decided to sort of take it to the broader market. Of course, it's Ledger's product, but now Ledger Vault today is being used by most of the major exchanges for the cold storage. It really is the number one de facto player when it comes to the institutional side, and there hasn't been any data breaches. And one of the reasons we like them is their focus was probably like 90% on security and not so much on the hype and marketing and all of that. So that was sort of our way of getting into the space and really delivering the product to our clients that our clients could trust. Because on a legacy side, we're not a tech company. We recognize we're not going to hire like 200 people to build like a technology solution, to build, to set up a supply chain to manufacture security devices and all of these things. So it was really a very good partnership in the early days. We did a lot, and that's how we got into it. And that it's been really good in that sense. We focused on security, we focused on right things, and that's how we've kept people's crypto and digital assets safe since 2018.
Yeah, no, that's a really fantastic story. I guess for the viewers, when you talk about crypto, because it's digital, I think in the last 4 months when the whole world went into lockdown, you see a spike in hackings, right? Like Twitter got hacked the other day, and so anything that's online or anything that's on a digital format, it's quite scary. I mean, because we're not like computer scientists or whatever, right? So it's quite a scary proposition for a normal investor who's not a distributed computing computer scientist to get into, because there's so many things that could go wrong and can go wrong, right?
Mm-hmm.
And so I guess maybe one of the advantages, one of the main benefits of I suppose going through a trust company would be that security side, because essentially you're outsourcing the security part to the trust company, right? Just like why do we say store our money in the banks, right? Essentially, you're outsourcing that security portion also to the bank. They have so many procedures, physical security as well as online security. So I guess that's one aspect. So you know, to to take custody of digital assets, right, and to look after digital assets. Um, how many such trust companies do you see doing that here in Asia?
Okay, so I'll really jump to your last bit of your question. So there is only basically two places in Asia where this is possible, and that is Hong Kong and Singapore. And the reason for that is most of the countries in Asia do have capital controls, meaning that there is no free movement of money inside and outside of the country. And it's it's not only like Southeast Asian countries, it's also North Asian countries. Korea has some form of capital controls. Japan, China. You have all Southeast Asia, like Thailand. All of these countries have some form of capital controls. The only two jurisdictions where you don't have that is basically Hong Kong and Singapore. And that leaves us with a very simple comparison. So there have been startups in Singapore that have tried to set up trust structures in Singapore to offer safe custody of digital assets. But the downside is that in Singapore, a trust company can only hold crypto assets. They cannot deal with fiat in a way, or traditional currency for some of the, maybe more traditional listeners, like, they cannot hold US dollar or Singapore dollar if they're focusing and doing digital asset custody. But in Hong Kong, it's quite different. So as I mentioned before, the property is defined quite broadly, and we're actually allowed to take deposits of property in Hong Kong, whether it's cash, whether it is digital assets, whether it is fine art, or bottle of 30-year-old wine. It's all treated as property, and we can handle these both sides. And why this is really important, why the digital asset custody space in Hong Kong has really evolved, and this is not to sort of put behind Singapore, but why it has evolved more in Hong Kong is because we can deal with all these kinds of different assets. And this is quite important when you think about it, because crypto won't take off if it's a secluded, isolated asset class. That's how we see it. Like, crypto is an asset class, and for it to become mainstream, maybe today we're trying to see like what's the future of crypto. For it to become mainstream, whether it's institutional adoption, whether it's for individuals to use it, you need to be able to hedge your risk. You need to be able to participate in different asset classes. And if you have your crypto, let's say, with a one company, and you have your stocks with another broker in, let's say, in US, and then you buy into some funds in Europe, the timing between that, you just cannot go from one asset class to another. And the world we live in today, you need to be able to be adaptable. So what Hong Kong delivers on that is really what we sort of coined the term beyond custody, is that you can go between asset classes, and you can reduce or mitigate the risk of holding crypto by being able to exit it at any time and then go to another asset class, let's say commodities or stocks, or just hold the cash when you really need to. But you can't really do that in Singapore per se. And like I said, all the other countries in Asia are pretty much out of the picture, because there's capital controls, and movement of money and also crypto outside and inside of countries is just too cumbersome.
Okay, cool. So I've got a question here from a viewer. So in terms of First Digital and its custodial services for digital assets, right? They don't send you a cold wallet to custody, right? They actually send you the digital asset into First Digital's wallet, right? Is that how it'll work?
Yeah, that's correct. So when you onboard with First Digital, you actually get your permanent receiving address. You can generate more receiving addresses, but the way you deliver the assets to be held under the custody is you basically transfer those assets. If it's crypto, you would be transferring to a specific wallet address that's segregated from all of our other clients. That's your own address, and you would be transferring to that address. And once it's there, it's confirmed. those are assets under our custody, essentially, to your benefit.
Yeah. So essentially, you don't hold you don't hold the private key anymore. The private key is now with the First Digital.
Yeah, so that's where we bring in the sort of the internal controls and operational controls. So normally, imagine like you're a retail user, you have like a Ledger Nano, you hold your own crypto, you write down your secret key. You probably, if you're smart, you lock it away somewhere where nobody can see it, and that's what we call self-custody. So you hold the device, you know your PIN codes, and you are also in control of your private key. What we are doing more on the institutional side is we have put in place internal controls. So first of all, the private keys that we do hold for our clients are separated. There is various rules when those come into play, and then we have operational controls on top of that to enable the day-to-day operations. But really, the private keys are, there's a whole mechanics that's in place to keep those safe. And it's, one of the things, we always joke around, you see a lot of companies, especially tech companies, coming into crypto space, and, they said, we bought a mountain in Switzerland and, old Cold War bunker, and, keep all of our keys there. It's not so much about that, in a financial space. It's more about operational controls, internal controls, and how that is implemented and done. You don't need the bunker underneath the mountain to keep your clients safe in that sense.
Yeah. Okay, so that's interesting. So if you don't mind, can we dive a little bit deeper into, you mentioned some operational aspect. Would that be, for example, where it's like a multi-key, multi-party signature, kind of like co-signing on a check or something, if you need to transfer any of the digital assets?
Yeah, so that's it really depends on the client needs. So if you're an individual client, let's say just individual person, and you're trying to hold crypto on the individual level, we would set up very simple rules. We will keep your crypto safe, and you will have a certain level of control over your account. But if you're an institutional client, normally what we do is we set up very more sophisticated rules in terms of how many signatures are required to make transactions, what are the whitelisted addresses, and so on. There's a whole like a sort of like a long planning stage that goes into that.
Okay, cool. I'm gonna switch gears a bit, and I'm gonna there's a question from Alexander, right? So he says, how do institutional funds respond when the price of Bitcoin and altcoins drop for prolonged periods? I guess I don't know if you're allowed to disclose. Obviously, you as a custodian, you'll be essentially, for an institution to want to get into this asset class, they would actually need something like a First Digital, right, in order to have custody of those assets.
Yeah, so it's the same in most countries, like in Malaysia and in different countries. In Hong Kong, the regulators usually demand that if you're running a fund, you need to have an independent custodian or a qualified custodian. But in terms of sort of response to this question, I think most of the funds these days are not doing purely crypto investments. So it's not that they're directly buying Bitcoin and holding it, but they're mostly buying crypto derivatives. They're either doing like quant trading, they're doing all of these different strategies to maintain their funds. It was really the early days, like crypto funds, that just put a bulk of money into like, let's say, crypto or altcoins. But now it tends to be much more complex, and you see like different kinds of products coming out there that are more catered on these types of investors, basically more like institutional products. And the traditional like crypto space quite often can't actually access that.
Okay.
I mean, like retail space.
Yeah. So Alex has another question, which I'm going to put up on the screen. So it says, how long do institutions usually hold the crypto assets? Are you seeing more holding for the long term, or do they just want a place to store crypto for a short term? Or maybe you already answered that in terms of the derivatives.
So you have to break it down. Like there's different types of institutions. There are very like some of the early days crypto funds in US that are holding crypto, and they are purely holding like Bitcoin, and that's their most of their play. But most of the newer crypto funds tend to be focusing on like fund strategies. They tend to be focused on derivative options products, and that's how they generate yield basically. And you can imagine that between these different spaces, the time horizons are very different. You know, somebody that's buying in a long term and that got in really early, they're not in a hurry to sell right now. But you know, if you're like a quant trading fund, your strategy might be, you know, liquidating, you know, and buying every minute basically. So it's very different, and really depends on the particular approach of the institution and what they're doing.
Okay. So, you know, when we talk about custodians, you know, obviously there are a few names within the crypto industry which are quite known in America that are, you know, in this space, right? So one of the probably the most famous ones would be Coinbase, right? And then you have BitGo. I think that's the other one, right? So, but essentially, these were tech startups that went into this space, right, into the custodian space.
Correct.
So, you know, can you, you know, maybe describe how, you know, First Digital is a little bit, you know, like between First Digital and guys like Coinbase or BitGo, like how different, you know, do you see yourselves?
So I guess the good answer for that is that we did it the other way. So we come from a very traditional space, and we entered into a very digital space, which is, you know, there's also a learning curve. So we always, and I think it has served us really well. We were always focused on security. We always focused on procedure, and we really didn't went along with this, you know, whole ICO boom and, you know, doing like crazy stuff. So we try to bring some of these like traditional things into the digital asset space. I think I'm not wrong when I say that, you know, we were one of the first ones in Asia to talk about custody. Like nobody else, like back 2018, nobody was talking about custody, not even in US. Might be wrong on that on the US side, but definitely not in Asia. Like everybody was too busy doing their ICOs and, you know, just get rich quick schemes basically. And that's where we really focused, you know, like some of our clients, okay, how can we do transactions securely? And we were like, okay, both parties need to have an independent custodian. We can be that person or that entity. And, you know, we were trying to bring in some of these traditional things. But the companies that you mentioned in US, I mean, they've been doing really good job, like Coinbase, you know, they also took a very good approach, you know, fully regulated from day one, you know, very law abiding, you know, that's one of the reasons why they're one of the top exchanges right now. Same thing for BitGo. I think for US clients, they're a very good solution. They're probably less focused on technology these days as well. They maybe ventured into the sort of the legal side these days. I know they tried to build their own tech way back, and now there's quite a number of partnerships they have, and they use external stuff quite a lot as well. But for us, it was opposite. We came from the traditional space, and now, you know, with First Digital, we're really focusing on technology. We're investing a lot into technology. Most of our sort of focus is on building out some of these platforms, and not only just for, you know, crypto custody, because that's not what we're about. You know, we have a really great partnership with Ledger, but what we're trying to do is, you know, like in a banking, you have open banking APIs. We're really focusing on building some of the open finance APIs on top of a trust platform and allowing other fintechs to use that. So it's a very sort of opposite transition. But I think at some point, a lot of this industry is going to merge at the same point, where tech guys have built up a good regulatory base, and they're licensed and they're doing all of that great, and they have great technology. And same for us. We have super strong regulatory base. We have good structures, and we sort of merge on that center point in a way, just approaching the same thing from different ways in a way.
Yeah. No, that's really exciting, actually. So, from an institutional investor's perspective, right? Are there minimum holdings required to custody assets? Like, is there a minimum base? No.
Not really, but there is a line where it sort of starts to make economic sense. We are a technology provider. There is a cost to the services that we provide, and there is a way we charge fees. We do not stop companies from setting up accounts, but on their side, they might be operating a loss if they don't get their business going in a way that they planned. I would say that line is probably around 1 million US. So if you have about 1 million US plus under custody and you're actually doing business, then you can keep up with the fees that we charge.
Yep. Okay. That's
and this is institutional. Like, individuals is different. It's a very different pricing model, and the services we provide is very different as well.
Yep. Okay. You touched a bit about that First Digital is a technology, a fintech, essentially a fintech company, right? Because unlike the traditional trust company, you're actually building APIs so that your customers can actually just plug into those APIs. I personally think that's really cool. Like that's a it's a very cool feature. It's very I suppose customer focused, right? Because as we progress as a society, like banking hasn't evolved that much in the last so many years. So it's very interesting to hear that and refreshing to see this happening to a very traditional business, right? To see it evolving. Now, so there's another question that Alex had put up. Okay.
Sorry, if you don't mind, I'll put my camera on a stop because my computer battery is on 2%. So I gotta plug it in, but my camera is my cable is not long enough. So I'll just put it on a separate space. But yeah, you can carry on. Go ahead.
Oh, Alex wants to know if First Digital is gonna be a bank.
Well, we have a saying for that. So the saying is pretty much that, if we had $1 every time somebody said in a crypto space they're going to set up a bank, we would be millionaires already. And let me sort of elaborate on that. This is not in a condescending way at all, but one of the things that, there's a lot of ambition in the crypto space, and there's a lot of sort of ambitious projects and a lot of good ideas, but setting up a bank is not a good idea because, when you're starting in a fintech space and you want to set up the bank, you're probably entering one of the most regulated spaces in the world, no matter what your jurisdiction is. If you're setting it up in Singapore, you're setting up in Cyprus or, US or Canada, or no matter what, banks are one of the most regulated financial institutions in the world. And one of the things you have to really ask is, do you have capital to do that? And do you have the resources, especially on the compliance side, on the regulatory side, and also the infrastructure that goes into that, right? So you can buy a banking license in probably like Bermuda, but guess what? You can have a banking license and you're not being plugged into the financial system because you cannot get on the SWIFT network, or you cannot get a correspondent bank. And you have the license, you have the legal entity, and you have all of that, and it's super difficult. And for us, it's the same thing. Like we're a trust company. If we wanted, we're I would say we know the regulations quite well. If we wanted to set up a bank, we could probably do that. But it's a conscious decision not to do that because it's one of the most regulated spaces. And what banks are doing is banks are really lenders. Banks have a very specific function in the global financial ecosystem. And setting up a bank just because it sounds cool or it sounds grandiose or something like that, is it the best idea? You really have to sort of stack up all of those things, whether you can carry it financially, whether you can carry that legally, whether you have the operational capacity. And even if you do, banks are, very localized entities, right? There's thousands of banks in the US, there's thousands of banks in Europe. How many of those banks are really global players? So when you're in a crypto space, you really have to think, what are the benefits that being a bank actually gives us? Is it just because it's cool, or is it actually it allows us to do something, right? And it's two different things. So that's why you haven't seen a proper bona fide crypto bank yet. And there's so many people that have said they want to do it. They've tried to do it, but I would say the industry is not there really today. Yeah, and these are the questions that anybody setting up a bank in a crypto space needs to really ask themselves.
Yeah. So Gunnar, can you tell me, so going forward, right? For First Digital, what are your plans going forward for First Digital? I suppose for Legacy and First Digital.
So our core foundation, like I said, is really building out technology and to power the fintech companies in that space with core infrastructure. So we sort of bridge the gap between the traditional world, the fiat, the banking relations, whether it's investments and all of that, really to enable some of these crypto companies to merge into the traditional asset classes. That's one of the things. And the way we do it is with these open finance APIs and things that we're doing. We have received, we've worked with crypto companies for a while. We've had a really good reception in general. We do have a lot of supporters. We were on a fundraising mode last year, earlier this year. So we are, let's put it in a way that we closed our opportunistic seed series earlier this year from a venture studio in Taiwan. So now a lot of our focus is building out the technology, and we're not in a way just building technology, but at the same time we're also servicing these clients and then sort of taking also the input from the clients, what is actually needed. I think one of the advantages for us is that we've really listened to our clients. This space is very quickly changing, and we have to be quickly changing as well, and then focusing on the technology side of that.
Okay, that's interesting. So in terms of obviously you're building out a lot of new tech going forward. What do you see as First Digital's biggest challenge, and also what keeps you up at night?
I think these days a lot of it is revolving around maybe operational side, like how do companies operate in today's space. And I would say that operations wise, next 12 months is very it's like walking in a fog in a way, with all the COVID situation and all of that.
Yeah.
Crypto is an industry, especially like crypto, we deal with fintech and all of that as well, but especially like crypto is an industry that's very borderless. Many of our clients tend to be from other different countries, so we're sort of operating in a borderless space, but that today is defined by borders. Maybe these are some of the challenges that we're really facing today. Also scaling is quite important. So it takes quite a lot of time to build out the core solutions, and then scaling these up to a proportion where the companies can actually deploy them effectively and really put them to use.
Okay. So I'm gonna bring the question back to again to be more viewer-centric, right? So, assuming I bought Bitcoin back in 2010, and I $1,000 back then, you've got $9.2 million today, right? And so I've just bought it, forgot about it, and then I realized, oh, I've got all this Bitcoin now, and it's worth so much. And I am planning for the future, for the next generations and stuff. How would a person like that go about I suppose they can keep it on multiple ledgers, right? They can keep a bit in ledgers, and like you said, hide them all over the place. They could also I suppose go through a trust, right? Like to then have, say, for example, First Digital to take custody of that of the Bitcoin that that was purchased back then, and then so that there's continuity, or at least however you set up that trust from a personal capacity, how you want to benefit, I don't know, the next generation or whatever.
So yeah, this is sort of an interesting question. I mean, like I think my answer to this one usually is that going full like Pablo Escobar, burying money in the barrels in the ground is not a best option, because it tends to rot away and you can't really spend it. We live in a world where it's very transparent. You have to pay taxes. But you also have a right as citizen of every country, just the same way like every tax authority, whether you're from Malaysia or you're Hong Kong from US, every tax authority has their authority to collect the maximum amount of taxes from you, right? If you have salary or income, all of that. But as a citizen of any country, you also have the right to structure your personal affairs in a way that you fall into the lowest tax bracket, essentially. So going rogue and just hiding your crypto on wallets, it's not a good strategy, because eventually you won't be able to use it. And eventually, all of these things are going to come up, and tax authorities are getting more tech savvy, and it's going to catch up. What you do want to do is you want to minimize your tax burden. So if you really have made money in the crypto, the way to do it is to minimize your tax burden, set up structures that allow you to bring it to the lowest level legally, and build your wealth from that, right? So if you made like $10 million from crypto, you can put it into a trust, you can declare it to the tax authorities and all of that, and at least it's usable. You can buy property, you can buy other assets from that. Versus, what's the opposite solution? You hide it in a treasure under your pillow, and you just look at the treasure, and what are you going to do with that, right? So only thing you can probably do is it's going to be considered illegal anyways. So it's very important to structure it properly. It doesn't mean that you have to hide it, but you do have to structure it properly. And one of the things you want to consider, no matter where you're from, you have the right to to take it to the lowest tax bracket. That's why, that's why there is really sort of I don't even know how to word it in the best way, but that's why, like in US, you see like billionaires are paying less tax than a janitor, right? Because they have had the time and resources to structure their affairs properly. But you do need money, and you need some advice for that to set it up. So definitely hiding, trying to skirt the laws is not a way to go. But you have an option to do things properly, and it's something that if you want to maintain your wealth, you don't want to lose it. That's the way to go.
Yep. Okay, and with that, I think we've come pretty close to the end of our session. Gunnar, I want to thank you so much for coming on this live stream to talk to our viewers about about legacy trust, about what a trust is, right, and then to talk about providing trust for digital assets. I think going forward, digital assets is going to be the norm. Like it's not even an if, but it's a matter of when, right? And so I think you guys are doing a great job, and I think it's fantastic that you're that First Digital is innovating, right? Like with the APIs and all that. I think that is fantastic. So I just want to thank you for coming on. And to our viewers, next week, same time, same place, right? It's going to be Copy Time, Crypto Night. Gunnar, any last words before we call it a night?
Yeah, I guess all the entrepreneurs out there in the crypto space, just keep building great products. If you need any help in terms of infrastructure, all of that, we are here to help. And everybody else, thanks Andrew for having me on the show and having this session today. And everybody listening, hope you had an interesting time. And just thanks for having me here.
Fantastic. Also, obviously, any of the viewers, there could be some Bitcoin billionaires out there, right? So if you guys want to get in touch with Gunnar, how can they get in touch with you?
So you can reach us through Legacy or First Digital website, which is legacytrust.com.hk or First Digital, as in one onestdigital.com, or I'm sure the helpful folks at the EquitiesTracker can link us up.
Sure. In fact, if you want to share your slides tonight, we're happy to upload it onto our WhatsApp, and then you can just send a message to our WhatsApp number, which is +603 8408 2070. Just send a hi, and then we can download a copy of Gunnar's slides. And with that, have a good night. Thank you everyone for tuning in. Hope you learned something tonight, and thanks again for coming on, Gunnar.
Thank you so much. Good to be here.
All right. Good night. Bye-bye.
Thanks. Bye-bye.